Everyone likes the story of an outcast.
Sam Bankman-Fried, the crypto billionaire.
Sam will tell you he's always wanted to get rich, but not for the reasons you might expect.
A brilliant oddball who appears once in a generation.
Arguably the most important person and company in crypto right now.
He's also been called the next Warren Buffett.
A person who can make the world a better place.
The most successful entrepreneurs in the world of cryptocurrency is Sam Bankman-Fried. He's created the FTX platform, and that platform has been so successful in the cryptocurrency world that Sam has become one of the wealthiest men in the world.
Classic nerd who sleeps in the office and creates a product for millions of people. But this is not the case with FTX. After the fall in the price of Bitcoin at the turn of the year 2018, it took about a year before Bitcoin started making headlines again. People simply and plainly want to get rich. If I told you that there is a magical box that can multiply your money, you would surely be interested in how to get it. At the end of the year 2020, the price of Bitcoin started rising again. The rising price of Bitcoin, like a magnet, attracts more and more people. At the end of the year 2020, celebrities in TV shows promoted NFT collections, while others used cryptocurrencies to pull money from their fans. None of it mattered. In the newspapers, you could read about people who had become millionaires thanks to cryptocurrencies.
Called Dogecoin, and in 69 days, he went from a struggling music producer to a millionaire.
Bitcoin is a tremendous force that can make the world a better place.
And that logically caught the attention of many people. This crypto magical box was able to multiply your savings within just a few months. But to buy it, you need one thing, an exchange.
Like I was saying, it's FTX. It's a safe and easy way to get into crypto.
Yeah, I don't think so. And I'm never wrong about this stuff. Never.
Leaked financials that came out on Saturday from CNBC show that FTX grew a lot from 2020 through 2021.
FTX allowed the purchase of cryptocurrencies and other instruments on their platform. Thanks to a massive marketing campaign involving many well-known personalities, the FTX brand came before almost everyone's eyes. One example says it all. At the Super Bowl in 2022, there were so many crypto-related advertisements that some articles called it the Crypto Bowl. And one company couldn't miss out. Of course, FTX bought this prestigious advertising spot. In this ad, the famous actor Larry David also appeared. It was the only commercial he ever starred in. And it wasn't just about the Super Bowl. FTX was everywhere. Stadiums turned into FTX arenas, sports teams changed names. Financial influencers promoted FTX in almost every video. FTX founder Sam Bankman-Fried became an internet darling, embraced by influencers and investors alike. Googling the name Sam Bankman-Fried would show you pictures with celebrities, articles in Forbes, and predictions claiming he would be the new Warren Buffett. However, FTX was founded in 2019. That means just a few years ago, nobody really knew who Sam Bankman-Fried actually was. Sam's big advantage was the image he built. He was a billionaire who drove a Toyota, wore inexpensive clothing, and claimed to donate 99% of his wealth to charity. Such a person you simply had to love. The media and investors saw him as a nerd who slept in the office, had peculiar hair, ate vegan food, and wanted to change the world for the better. Some aspects, as later revealed, were more fictional than true. Andy Croghan, one of the most experienced employees, reportedly tried to ensure that when investors entered FTX offices, they saw Sam sleeping on the floor. When advised to get a haircut, he responded, "I think it's important for people to think I'm a bit of a madman." Whether his image was real or invented, at the beginning of 2022, it seemed like Sam Bankman-Fried and FTX owned almost the entire world. However, his downfall came quicker than anyone could have imagined.
Breaking news tonight here in Top Story. Sam Bankman-Fried guilty on all 7 counts of fraud and conspiracy.
Sam Bankman-Fried stepping down as CEO of FTX as his crypto exchange files for bankruptcy.
On the 11th of November in the year 2022, the company FTX declared bankruptcy, turning one of the most popular figures in the crypto space into one of the most hated people in the world. How did it all happen? And could it happen again? Good question. But to answer that, we have to go back, way back to the very beginning, before FTX's creation. Sam Bankman-Fried certainly wasn't born into a bad family. His parents taught law at Stanford. In the year 2010, the FTX story begins. Sam Bankman-Fried, while studying at MIT, met his future co-founder, Gary Wang. Not many know this, but Sam couldn't code. It was Gary who was responsible for the vast majority of the code for the FTX exchange. After finishing at MIT, Sam joined Jane Street. This firm dealt with quantitative trading on the stock exchange, and it was at this firm that Sam met several important individuals. The first was Caroline Ellison, a key figure in the whole story. As we later find out, even in the ongoing trial, Sam enjoyed his work at Jane Street. However, he was quite fond of taking risks, which led him to decide to leave and start his own business. In 2017, he contacted former MIT classmate Gary Wang. Gary was working for Google at the time. Nevertheless, Sam's offer was so interesting that Gary couldn't refuse it. Thus, Alameda Research was born. This piece of the puzzle will play a bigger role in FTX's downfall than one might think. Initially, Alameda engaged in so-called crypto arbitrage. When you Google the price of Bitcoin today, you see only one number. However, in 2017, Bitcoin was traded at various prices in different parts of the world. The difference between the price in America and the price in Japan could easily be $5,000. All Sam Bankman-Fried had to do was figure out how to buy efficiently in America and sell in Japan. But it wasn't as simple as it might seem at first glance. Regulations and anti-money laundering laws were hard to circumvent. However, Sam found a way, thanks to a person he met in the community of so-called effective altruists. Going back to the year 2014, it's discovered that Sam loved mathematics, veganism, and fought for animal rights. He donated 50% of his salary to charity. He was an ideal candidate for the effective altruism community. Effective altruism is a philosophy and social movement seeking the most effective ways to improve the world. In other words, members of this community strive to become rich to donate as much money as possible for charitable purposes. This community had a huge influence on Sam. It convinced him to work on Wall Street instead of working for non-profits. And 50% of his huge salary went to charity. And that's exactly what Sam did. Perhaps that's why he gained a very good reputation in the community, which he subsequently used when founding Alameda Research. The Japanese member of this community helped him figure out how to bypass Japanese regulations, and he got initial capital from wealthier members of this movement. For instance, Skype co-founder Gene Talon lent him $50 million. And it worked. Sam made a lot of money through Bitcoin arbitrage. It's not known exactly how much, but it was likely in the tens of millions of dollars. However, a problem emerged on the horizon. With each arbitrage trade Sam made, the profit for the next arbitrage decreased until eventually, Bitcoin prices were the same worldwide. Sam had to come up with a new way to make money. And he struggled with that. Alameda Research started losing money, and the other members were, to put it mildly, frustrated by these results. And guess who they blamed for these results? Sam was behind many unsuccessful trades, many of which were executed solely on his instruction. In April of 2018, other members had had enough and wanted Sam to step down. However, Sam didn't want to resign. And what he did instead of resigning explains why FTX went bankrupt.
I lost over $2 million on the FTX platform when it went down. It's really, really sad. Really sad. Not only how it's affected me, but how it's affected millions of people globally.
I'm deeply sorry about what happened.
FTX was established in 2019 when Sam Bankman-Fried met with Gary Wang and agreed to create a cryptocurrency exchange. Sam would own 90%, while Gary Wang would own 10% and take care of all the IT infrastructure. Sam thus owned both the exchange and a cryptocurrency trading firm. FTX's beginning was meteoric. It had one huge advantage. Alameda Research was able to provide sufficient liquidity to this exchange right from the start. However, few noticed the problem that arose. By owning FTX and simultaneously owning Alameda Research, which used FTX to conduct trades, Sam had a massive conflict of interest. Essentially, no one could guarantee that Alameda wouldn't have special conditions and powers when using FTX. And this conflict of interest, as later revealed, was the beginning of all the problems.
With FTX, I have everything I need to buy, sell, and trade crypto safely. How did you do this so quickly? I mean, your company is 2 years old, and you're doing something like $400 billion worth of volume per month, which is 25 times what you did a year ago.
Is a reputable exchange who gives the best pricing and has a wide range of products and services to choose from. That's why I'm really proud to stand behind today's sponsor, FTX.
FTX continued to grow at a rapid pace. Combining this with how Sam was perceived by investors, there was practically nothing stopping FTX's growth. Ordinary people often see individuals who spend several days indoors, wear dirty clothes, and haven't visited a hairdresser in 6 months as oddballs. However, when investors see the same person, they immediately take notice. In 2021, Sam had a meeting with investors from a fund called Sequoia Capital. It's one of the most significant funds that invested in companies like Apple, Airbnb, WhatsApp, Instagram, and many others. It was precisely at this meeting where Sam presented his vision for FTX. He wanted to create a platform where people could buy Bitcoin or stocks, send money to anyone, anywhere in the world, or even buy groceries. Ambitious goals? Exactly what these funds like. Investors from Sequoia Capital were captivated by Sam's vision and decided to invest. In total, FTX raised $900 million from investors. The company's valuation, which was established just 2 years ago, reached $18 billion. This massive investment meant one thing: FTX was seen everywhere. In September 2021, FTX began sponsoring the Mercedes Formula One team, and in October, FTX secured further capital from investors. Within a few months, the company's valuation soared to $25 billion. Almost all major funds invested in FTX: BlackRock, SoftBank, Tiger Global, and even Temasek. FTX had everything these investors were looking for. It had vision, it had a nerd in leadership, explosive growth, and the potential to change the world. However, these investors overlooked several so-called red flags. In January 2022, FTX raised an additional $400 million, pushing its valuation to $32 billion. Sam allocated a significant portion of this money to marketing. Influencers, celebrities, stadiums. Sam succeeded in getting FTX in front of as many people as possible. One example among many is the well-known American personality Kevin O'Leary.
It is a useless currency. That's what I believe. I mean, look, I realize people have different opinions, but to me, it's garbage. You own Microsoft. If you own Google, why don't you own Bitcoin? It's all software. I have millions of dollars. 20% of my portfolio is now in cryptocurrencies and blockchain.
It took $15 million, and from a cryptocurrency critic, he became the official spokesperson for FTX. Investors provided money to FTX, and FTX exchanged money for users and advertisements. However, there was one investor who caused the downfall of this entire company. An investor you wouldn't expect.
Hello friends, welcome back to the channel. I bought some FTT tokens.
Which holds FTT tokens.
Why is FTX token, FTT, in a bullish phase? The cryptocurrency market appears to have bounced back from the recent crash due to the ongoing Russia-Ukraine turmoil.
Sam Bankman-Fried definitely wasn't foolish, and for example, the decision to create the FTT token for FTX helped a lot. In the world of cryptocurrencies, anyone can issue their own token or cryptocurrency. There are even tutorials on how to do it within half an hour. Tokens were often used by celebrities to pull money from their followers. In some companies, they were presented as shares of that company. Want to profit from our company's future profit growth? Just buy our token, because from our future profits, we will repurchase some of these tokens from the market, theoretically raising the price of these tokens. When you think about it, the token price will respond to how high our profits will be. The higher the profits, the higher the token price will be. To be clear, a token is by no means the same as a company's shares. The FTX company issued the FTT token. Thanks to this token, users had a discount on fees on the FTX platforms. However, the overwhelming majority of these tokens were owned by FTX's Alameda Research itself. In the summer of 2019, the FTT token was launched and had a rather good start. After a year, it was being traded for almost twice the value. The total circulation was set at 350 million tokens. If you multiply that by a price of $3, FTX and Alameda owned tokens with a market value of approximately $1 billion. There's only one place where you can create $1 billion out of nothing. Few could imagine at the time that this token would be used against FTX. While FTX and Alameda owned the FTT tokens with an enormous value, they couldn't convert them into dollars. The moment they started selling millions of tokens, the FTT price would plummet by tens of percent. Therefore, they held something theoretically valued in hundreds of millions of dollars. They could never sell it and actually realize that money. So, were those tokens useless for them? Well, not entirely. FTX could, for instance, go to a bank and ask for a loan. When asked what they would guarantee, they could point to their FTT tokens. FTX could include these tokens in their assets, thereby improving their financial balance sheet. This token was initially the driving force behind FTX's growth. However, an event occurred that almost no one foresaw.
Ordinary dropped to just 12 cents here, way off its $1 peg. Luna has had an absolutely massive crash. It's basically worth zero now.
What was 115 grand about a month ago, and what was about 80 grand last weekend and 42 grand Tuesday night, was now about $2.
The collapse of Terra Luna triggered many problems. With the fall of these cryptocurrencies, investors lost approximately $60 billion, and soon people began to ask, who will be the first victim of this downfall?
That liquidation of Three Arrows Capital.
Very prominent crypto hedge fund, Three Arrows Capital, defaulted on a loan to Voyager worth more than $670 million.
Crypto hedge fund Three Arrows Capital was led by enthusiasts who were convinced of two things. First, that they could double their money within 2 months without significant problems, and second, that if they couldn't, they could borrow the money. Something like Michael Saylor, who recommends people mortgage their houses and pour the money into crypto. But at Three Arrows Capital, they took it to a completely new level. When they bypassed all institutions that could lend them money and borrowed $3.5 billion. Among the institutions lending to this firm were Voyager, Celsius, Genesis, and Blockchain.com. However, even the brilliant managers at Three Arrows Capital couldn't predict the fall of Terra Luna. Naturally, this made all the institutions lending to them nervous. They logically wanted Three Arrows Capital to return the money. The problem was that the founders disappeared, and the company declared bankruptcy. In the crypto environment, this is quite a common occurrence. However, their downfall marked the start of the entire saga. Companies like Voyager or BlockFi operated by taking cryptocurrencies from people, which they then lent out, offering interest rates as high as 10% annually. As I've mentioned in some of my videos, nobody offers a 10% annual return without risk, and in this case, the risk was enormous, even if it wasn't often presented that way.
Just listen to him pitch Voyager as being as close to risk-free as you can get in crypto.
I'm not trying here to say it's 100% risk-free, but it's as close to risk-free as you're going to get in the crypto universe.
Mark Cuban is an American billionaire, and in this video, he promotes Voyager, a company that, according to his words, is almost risk-free. However, Voyager lent out more than 50% of its funds to Three Arrows Capital. As you might guess, Three Arrows Capital did not return the money. What's interesting is that despite this massive crisis in the entire crypto space, FTX continued to thrive. Not only did they keep growing and spending on marketing, but Sam even tried to save some of these failing companies.
They call him the JP Morgan of crypto, right?
Yeah, the Michael Jordan of crypto, if you will. Spent hundreds of millions of dollars to bail out struggling companies facing bankruptcy, liquidity issues, you name it. Do you still have enough cash if you needed to do another bailout?
Yeah, we did, and we try to keep that on hand. Like, we try not to empty the coffer, so to speak. We had a couple billion going into this.
Either he lent them money, or he simply bought them. One of those companies I bought was Voyager, for which I paid $1.4 billion. What's interesting about this purchase is that, as you already know, Voyager lent more than half of its money to Three Arrows Capital. But that's not all. Another approximately 30% of the money was borrowed by Voyager from Alameda Research. Is it possible that Sam bought Voyager just so that Alameda wouldn't be forced to repay this loan quickly? Hard to say. What we do know, however, is that at that time, Sam acted as a hero who was saving the entire world of cryptocurrencies. People even said about him that he was the new JP Morgan. Sam's cleverness in presenting himself to the public cannot be denied. The story of a nerd who sleeps in the office and saves the world of cryptocurrencies just to donate all the profits to charity. How can you not root for such a person? Both influencers and investors believed this story. If investors had really done their research and questioned some of Sam's claims, maybe they wouldn't have invested in FTX, or at least, they would have blindly trusted him and wanted, for example, an independent board to oversee how Sam managed FTX. By the way, this is a common practice. Investors who own a large stake in companies typically want a place on the board to oversee the CEO's decisions. However, Sam didn't want anyone to oversee how he managed FTX. He told investors that he wanted to run the company without much supervision, and if they didn't like it, they didn't have to invest. This huge red flag didn't discourage investors. And you know what? I'm not surprised anymore. In an article published by Sequoia Capital, it was revealed that Sam Bankman-Fried played the game League of Legends during a meeting with investors. Investors invested anyway. They simply focused on Sam's story and how he could change the world and make billions of dollars. But nothing lasts forever. FTX, Coinbase, and Binance are competing for customers and to become the world's largest exchange. And now is the right time to go back. But there was one investor who caused the downfall of this entire company, an investor you wouldn't expect. The investor who bought a stake in FTX in December 2019 was none other than one of their biggest competitors, Binance. Binance is led by a person named Changpeng Zhao, often nicknamed CZ. At the end of 2019, it might have seemed as if CZ and SBF could have been great friends and built something special together. At that time, Sam certainly didn't know that it would be CZ who would cause the downfall of FTX. However, it was Sam himself who gave Binance a loaded weapon and aimed it at himself. In June 2021, Sam made a huge mistake. A mistake that later caused the downfall of his entire empire. Sam decided to buy back a stake in FTX from Binance. In interviews, he mentioned that he believed there were differences in how Binance and FTX managed their business. However, Sam paid for this stake in FTX with perhaps the worst possible currency.
What is the FTX token? The FTX exchange's native token is FTT, designed to increase network effects around the platform.
Binance received a large amount of FTT tokens for its stake in FTX. Until then, these tokens were held in large quantities only by FTX and Alameda, both controlled by Sam. Now, however, there's a third player on the scene, Binance and CZ. Thanks to the buyback of shares from Binance, Sam gained greater control over FTX. Managing FTX, however, took up quite a bit of time and focus. That's why Caroline Ellison and Sama Trabucca were promoted to co-CEO positions at Alameda Research. Some conversations between these two began to raise questions.
Yeah, absolutely could pull it off without my math degree. Use very little math. Use a lot of elementary school math, like arithmetic. Yeah, I'm trying to think of a good example of a trade where I've lost a ton of money. Well, I don't know. I probably don't want to go into specifics too much with that. Yeah, I think we tend not to have things like stop losses.
In these conversations, Caroline Ellison sounded more like a gambler than a sophisticated quantitative trader. Many people asked, if she sounds like this in conversations, what do the trades made by Alameda Research look like? Over time, more and more people began to notice the conflict of interest between Alameda and FTX. Just a few months before the collapse, we noticed more red flags. In August, Sam Trabucco left Alameda Research. About a year ago, SBF appointed him as co-CEO. Shortly after, Brett Harrison, the CEO of the US branch of FTX, also left. Departures of people from the company's management are hardly ever a good sign. However, few could imagine how bad the situation actually was. 9 days before the collapse, the first real trigger of FTX's fall emerged. An article on CoinDesk titled, "Splitting Sam Bankman-Fried's Crypto Empire Gets Messy in Alameda Research's Financials." Someone provided CoinDesk with Alameda Research's financials. You know, a company's financials can tell you a lot about it. You can see how much a company owes or what it owns. And this article says, I quote, "This balance sheet is full of FTX, specifically the FTT token issued by the exchange, which provides holders with a discount on trading fees. Although there's nothing inherently wrong with that, it shows that Bankman-Fried's trading giant Alameda is largely based on the foundation built by a sister company's coin, not an independent asset like fiat currency or other cryptos. The situation adds to the evidence that the ties between FTX and Alameda are unusually tight. Overall, Alameda Research had $14.6 billion in assets. However, most of its money was in the FTT token, which, as we mentioned earlier, it could never sell. Not only was Alameda more closely linked to FTX than people thought, but financially, it was not doing well at all. Could FTX withstand this article? Probably. There was no significant drop in the price of FTT after the publication of this article. This article revealed some of the cracks in Sam's empire. It turned out that Alameda wasn't in good financial shape and was more connected to FTX than people thought. People on Twitter called Sam a fraudster, but it was far from a majority opinion. This article hurt FTX but didn't bring it down. However, if someone hypothetically wanted to take down FTX, they now had an ideal opportunity. At 4:47 p.m. on November 6, 2022, Binance CEO CZ published this tweet. Remember when I said Sam handed Binance a loaded gun and aimed it at himself? This tweet was like a gunshot. This single tweet meant the collapse of a company that had a valuation of $32 billion. For comparison, that's the same valuation that Spotify has today. In this famous tweet, CZ mentions that he plans to sell all FTT tokens. Fear and panic spread quickly, especially in the era of the internet.
There's been a lot of market movement following the announcement from Zhao on Sunday that his firm would liquidate its holdings of FTT due to, quote, recent revelations.
Armageddon is here. The biggest players in the world are at war. They're fighting it out.
So Binance CEO CZ got in on the actions. He said that he would be liquidating the exchange's FTT tokens on its books.
CEO of Binance single-handedly just collapsed the entire crypto market by liquidating his FTX position.
FTX tokens could only be sold by three main players. Alameda was the first, FTX was the second, and Binance was the third. Regardless of who would sell these tokens, it would mean a drastic drop in price and disrupt the entire trust in FTX. At 5:03 p.m., Caroline Ellison tried to do damage control by tweeting that FTX would easily buy back all FTT tokens from Binance for $22 each. Everyone knew by now that if Binance sold these tokens on the open market, it would result in a total price collapse. As FTT was used as collateral by both FTX and Alameda Research to obtain loans, many institutions that lent to them began to worry. And let alone the people who had money with FTX. Even at this moment, CZ could possibly stabilize the situation, say that Alameda Research will buy back all the tokens from them and just leave. But why would he? Binance and FTX are, after all, competitors. Sam Bankman-Fried lobbied for regulations that would benefit FTX and harm Binance. He was the sixth largest political party donor in the USA. He spent tens of millions of dollars on lobbying every year and expected just one thing in return: regulations that would favor FTX over Binance and other competitors. But guess who didn't like that? Binance. CZ and Sam were far from friends by the end of 2022. Quite the opposite. And Binance succeeded in destroying one of its biggest competitors. After this tweet was published, the FTT price dropped by 90%. People began to fear FTX's future and started withdrawing money. Logically, if I had my life savings in a bank and heard it might be in trouble, the first thing I'd do is want to withdraw that money. In America, this phenomenon is called a bank run. It's a situation when people lose confidence in a bank for any reason and in crowds come to withdraw money. However, if the bank doesn't have enough money to serve all clients, it simply collapses. It was similar in the case of FTX. People started to fear for their savings and withdrew as much as they could. And as everyone saw their acquaintances withdrawing money, they decided to do the same. Social media was flooded with various posts about it. Fear and panic pushed people to withdraw money from FTX as much as possible. A day later, Sam came on Twitter. But he didn't write anything about FTX having issues. On the contrary, he wrote that the competition was trying to destroy FTX with false rumors. He further reassured that FTX was fine and that the assets were also okay. However, the next day, CZ tweeted that FTX had asked for help. They were experiencing significant liquidity problems, and to protect all FTX users, he decided to sign a purchase agreement.
Let's talk about this huge acquisition that may be coming.
Binance is wanting to come in here and acquire FTX, but we'll see if that deal goes through.
Crypto exchange Binance announced a deal to buy rival FTX.com.
A letter of intent to unofficially buy FTX and to bail them out of trouble.
It's difficult to describe what was happening on the internet these days. I would call it absolute chaos. Many people couldn't believe what actually happened, and no one knew what would happen next. In CZ's tweet, he mentions an interesting point. He signed a non-binding agreement to purchase FTX. That means it was far from clear whether FTX would be bought. Before the purchase, FTX must be verified. Up to this point, everyone thought that FTX had liquidity problems. People believed that FTX had enough money. The only issue was that it wasn't immediately available. It's like if I owed you $1,000 but only had 10 kilograms of gold with me. When you come asking for your $1,000 back, I can't immediately give it to you. I have to go sell my gold to someone and then pay you $1,000. It's not an ideal situation, but it's a situation that is solvable. The problem was that FTX didn't have this figurative gold.
It does appear that they are filing Chapter 11.
FTX went from a $32 billion company to bankruptcy.
As fallen crypto king Sam Bankman-Fried stepped down as CEO.
Unbelievable. So there it is. At this,
unbelievable.
There's so much we don't know. There's so much we don't know.
Well, here's what we know. He's broke.
And he's in big trouble. He's in big trouble.
The day after this tweet, Bloomberg and the Wall Street Journal come out with news that the SEC and SFTC are investigating FTX for how it handles client funds. Wait, until now everyone thought that FTX still had clients' money, it just wasn't immediately available. But this investigation claims something much, much worse. They suggest that FTX doesn't have the money that its clients gave it. On November 10, 2022, Binance tweets that they've decided not to buy FTX. On the same day, Sam tweets an apology and states that he is doing everything to obtain liquidity and pay back FTX users. Just a month ago, Sam was seen as the savior of the entire crypto world, as a white knight buying other failing companies, and within a week, this image changed. The bankruptcy of FTX meant that people could finally look behind the curtain. And behind that curtain was something unbelievable. Shortly after FTX's bankruptcy, articles began to emerge that FTX had taken clients' money and secretly lent it to Alameda Research. Some articles mentioned up to $10 billion. This, of course, is fraud and violates the terms of use set by FTX itself. Naturally, people asked what actually happened. Some might have expected Sam to step back and analyze every subsequent step with lawyers. However, he didn't do that at all.
Which is, what is this? And what did happen?
I made a lot of mistakes or things I would give anything to be able to do over again. I didn't ever try to commit fraud on anyone. I was excited about the prospects of FTX a month ago. I saw it as a thriving, growing business. I was shocked by what happened this month. And, reconstructing it, where there are things I wish I had done differently.
Sam Bankman-Fried wants you to know that he's sorry.
Yeah, I don't know what to say. What happened.
On the contrary, one interview followed another where he mentioned that he apologized for not knowing anything and that there were secret doors into FTX of which he had no clue. Typically, after a company declares bankruptcy, a new management team is assembled to ensure that investors and other creditors receive as much money back as possible. This new management is put in place to trace where all the money went. John Ray became the new CEO of FTX, a person who oversaw the liquidation of Enron, one of the biggest corporate frauds in American history. The reports he released were astonishing. I quote, "Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred at FTX." This report also claimed that Alameda had certain privileges, like an exception from the so-called liquidation protocol. The liquidation protocol tries to prevent you from borrowing too much money. When you borrow money from a broker and your trade doesn't go your way, what the broker typically does is a so-called margin call. In other words, they close your position and take back the money. This mechanism is used by every broker to protect themselves from losing money on borrowed funds. Alameda, however, had an exemption. It means they could lose as much money as they wanted, and FTX never requested them to close their positions and return the money. Alameda also had other advantages when trading against FTX customers. For example, they knew in advance which cryptocurrencies would soon be listed on FTX, so they could buy them beforehand. Newly listed cryptocurrencies typically surged in price by a significant percentage. Alameda could immediately sell them and make a substantial profit. This is illegal, but it's relatively common in the crypto space. Coinbase had a similar issue. What's funny about this is that despite everything, Alameda managed to make money. Remember that strange interview with Caroline Ellison? About how sophisticated their trading was. Now, it makes much more sense. Another incredibly bizarre thing was FTX's accounting. Not only did they use accounting software for small businesses, but their auditor was based, and I'm not making this up, in the metaverse. All of this is a massive problem. But it doesn't even compare to the biggest problem. The losses of Alameda Research were increasing, but Caroline Ellison wasn't solely to blame for it. Remember how Sam Bankman-Fried was perceived as the white knight of the crypto world, rescuing other failing companies? Well, during this rescuing, Sam Bankman-Fried made a significant amount of money. And he often used Alameda Research for this rescue. To support it, Sam decided to do something absolutely insane. He sent billions of dollars from FTX users' wallets to Alameda Research wallets. Sam wrote on Twitter that they were just moving funds between FTX wallets. But some suspected he was lying because some wallets that received the funds belonged to Alameda Research. According to Reuters, Sam didn't inform anyone in the management about this transfer because he was afraid the information might get out. And indeed, he had reason to fear. If this information had gone public, it would likely have caused the collapse of FTX. At this point, Sam had only one option to get out of this mess: make money through Alameda Research, secretly return it to FTX customers, and hope no one would notice. However, Sam didn't expect Caroline Ellison to spill the beans in a meeting with employees, essentially confessing to a criminal act. FTX's collapse harmed 1 million people who invested their money through FTX and probably will never see it again. There were many warning signs, such as conflicts of interest, no independent board, FTT token, strange transfers, or even Caroline Ellison's admission. Everyone hopes this situation will never happen again. However, I fear it might happen sooner or later. CZ, who was behind the downfall of FTX, just like Sam, runs an exchange. Today, it's the world's largest exchange, which, like FTX, operates its token, BNB, and owns the vast majority of these tokens. Therefore, CZ can use these BNB tokens as collateral against any financial institution. However, CZ also owns 2 other crypto trading companies, Merit Peak and Sigma Chain. And a few months ago, the U.S. Securities and Exchange Commission, SEC, started investigating Binance for sending Merit Peak $11 billion from clients' funds. It seems like déjà vu. To prove that they're not in the same situation as FTX, Binance decided to publish a proof of reserves. However, after publication, there were more questions than answers, and the audit conducted by Mazars is currently unavailable. The lack of transparency in these companies certainly doesn't inspire trust. When compared to some stockbrokers traded on the stock exchange, many of them regularly publish their financial results every 3 months. You can see what they own, how much they owe, how much they've earned, and where the money is going. The entire space is significantly regulated and monitored. However, FTX, Binance, and other cryptocurrency exchanges are nowhere near as strict with regulations.
Welcome back. We have breaking news on the Sam Bankman-Fried trial.
Bankman-Fried has pleaded not guilty to all charges, but if convicted by a jury, he could end up in prison for more than 100 years.
Many people wished for Sam Bankman-Fried to be punished for his actions. Many expected Sam to flee after FTX's downfall and seek asylum. However, the opposite happened. He attended interviews and moved around publicly. Almost every day, television provided him with a platform to explain what happened. He also had the opportunity to explain himself in court. However, his defense wasn't very strong. The jury unanimously ruled his innocence. In general, his defense could be summarized as claiming he didn't know what was happening. This crypto genius, appearing once in a generation, claimed he was unaware of the $10 billion being transferred between his companies. Sam Bankman-Fried was charged with 7 criminal counts, and he was found guilty on all charges. His court appearance went so badly that he had no one to testify in his favor. Therefore, he had to testify for himself. During his testimony, his defense used his deleted tweets, among other things, to highlight inconsistencies. Caroline Ellison and Gary Wang turned against Sam in court. They admitted their guilt and decided to cooperate. Gary Wang began his testimony by admitting to committing crimes at Sam's behest. For instance, Caroline Ellison mentioned how they used Thai prostitutes to bribe Chinese politicians, or that they created 7 separate financial statements to make it easier for Alameda Research to access capital. Furthermore, we learned that Sam and Caroline drove luxury cars until they realized it would be better for their image to drive a cheap Toyota. In short, Sam had only a small chance of winning this trial. On November 2, 2023, the jury delivered the verdict, finding Sam guilty on all 7 counts of the indictment. He faces a sentence of up to 115 years in prison. With this day, the collapse of FTX is completed. Thank you for watching until the end. Creating this video took a lot of time and effort. If you want to help me reach more people with this video, please like and share it. If you wish to support my work and access various benefits, check out my Patreon. The link is in the description. Thank you, and see you next time.